Welcome to the Daily Brief, where I'll go over the highlights in the market for Wednesday, September 21st, and then we'll see how things are shaping up for Thursday, September 22nd. And Wednesday was the big day. The Fed met. They raised interest rates by 75 basis points or 0.75%. The market gyrated all over the place and ended up having a pretty negative day. So let's go back and talk about what happened. At the open, we actually gapped higher. We gapped up to R1 at 38.79. And then after that, everything was just sideways, just a little bit above, a little bit below R1. And then the Fed announcement came out, and the first reaction was negative, and we shot down to S2 at 38.30. Then people went, oh, hey, maybe things aren't so bad after all. And we shot up to R2 at 39.02. That's like a huge move. And then as the press conference kept going on and we got closer to the close, we went negative again to below R2 at 38.05. So we dealt with 3,900 and 3,800 during Wednesday's session. We closed right at the low. We were down 1.71%. Volume was above average. And the technicals were negative, but we're potentially getting to a point, short term anyway, where we're looking more oversold. Even some of our intermediate term indicators are looking oversold, but it doesn't mean we have to stop here. There's still might be some more downside action. Just because something becomes overbought or oversold doesn't necessarily mean it turns on a dime right at that point. But it just means that exhaustion could be coming. Because the real fixation is inflation and interest rates, we also have some geopolitical concerns. The whole Russia-Ukraine thing, there's been some rhetoric, at least at this point, that may escalate slightly, which is never a good thing. But as far as the stock market is concerned, it's the Fed speak that came out after the announcement and the look forward here of what's going to happen with the economy. So what are some comments? As expected, they did make their 0.75% raise to the range now of 3 to 3.25%. The terminal rate, which had been at 3.8%, they raised that to 4.6%. That's quite a bit higher. This is when our interest rate's going to top out and start going down. To raise that is kind of concerning for the market and seen as pretty negative right now. The scenario is the same scenario. It's kind of surprising why the market is so shocked by a lot of this. But basically, the idea is that the Fed, they're going to keep raising rates. One thing that could also spook the markets is they're going to keep them at these higher levels for longer. And then Chair Powell also said it's likely that there's going to be another 1% to 1.25% move throughout the end of this year. So not really happy news coming out from the Fed these days. All 11 sectors ended up declining. The transports hit another 52-week low. Stocks are becoming short and possibly a little bit intermediate term oversold. We still have a number of the yield curves that are inverted. We're keeping an eye on that 10-year to the 3-month. It's still not inverted yet. Sentiment is dripping over more to the fear side, but not necessarily extreme. Other economic reports that came out, for the first time in a while, we saw the mortgage applications index actually go up 3.8%. It had been declining overall. Possibly folks were trying to get into the application process before interest rates were hiked. And then existing home sales. This is another area that's been showing some weakness. It was down 0.4% on a month-over-month basis, and they actually had more of an annual rate of 4.8 million existing home sales, where they expected it to be 4.7. And they revised things upwardly in the previous report. But overall, this is the 7th straight month that existing home sales have declined. And then the total sales were down 19.9% from a year ago. So this is the weakening of the housing market that we're seeing. We see little blips up here and little improvements there, but overall, we're seeing a decline overall. Our trend is negative. The ADX is above 20, just barely, and it's getting above the moving average. The red line's on top, so it is negative. Our bias is negative with the down day, and the last number of days have also been negative overall. So that's what we're going with for the momentum. So our outlook, technicals are negative and becoming oversold, both in the short term and intermediate term. We have the second quarter current account balance report coming out during Thursday's session. Not a major report. Jobless claims will come out before the market opens, and the leading economic index will also be coming out. We got the whole list of geopolitical events and concerns. Again, Russia, Ukraine might be creeping up a little bit more as it applies to the stock market, but the real fixation continues to be the Fed and interest rates and any Fed speak that comes out. So our scenarios, we have to pretty much go with the down scenario now. A lot of headwinds hitting the market. The technicals are decidedly negative, but might want to pause with this down scenario a little bit because we are possibly becoming oversold in the short term and even slightly into the intermediate term. We can't really go with the up scenario right now, although we might see some kind of a bounce after we went oversold. Our scenarios, forget those for right now. They're declining. Our technicals are negative. You can't really hang on to that. We're dropping through pivot levels and support levels. There's a chance that we might head back down to the June low again. So it's not looking very good right now for the market. We can't really go sideways because the ADX is above 20, even though it's just barely above 20, but it is negative. So the S&P is negative, short term negative, but oversold. Intermediate term could be becoming oversold. Long term is still decidedly negative. So thank you. I do have a full length video that you can watch where I look at the charts and have more analysis and commentary. Please feel free to check that out. I will look at Thursday's action and then decide after the close if I'm going to do a full length video or not.